Welcome back, everybody. Today, we're going to be diving into the world of Indian logistics.
Okay.
Specifically,
Sounds good.
we're going to be looking at Delhivery's Q2 FY25 performance.
Right.
And we have two sources to look at.
Okay.
We've got their investor presentation and we've got their financial reports
Yeah.
for the
Okay.
quarter ending September 30, 2024.
Good stuff.
So we're going to try to figure out, what is driving Delhivery's growth, and also how do they stack up in India's just absolutely crazy logistics landscape.
Yeah, it's going to be interesting, I think, to look at Delivery because, they claim to be India's largest integrated logistics platform. And when you look back at their track record, they've moved a lot of stuff.
Yeah.
We're talking over 3.2 billion express parcel shipments.
Oh.
And then 5.6 million tons of PTL freight.
That's a lot of packages.
Yeah, since they started,
Right.
So
it's a huge scale.
for big operation.
Yeah, but let's get down to this quarter. What did they actually do?
Yeah.
Their revenue came in at 2,190 CR,
No.
which was a 12.8% jump year over year.
Yeah. That's not bad.
Not bad, right?
Yeah, no, that's pretty solid.
It is impressive, but what I thought was really interesting
Okay.
was the performance of their PTL freight service.
Oh, yeah.
They had a 22.7% year-over-year growth rate.
That's booming.
That's booming, yeah.
That's not just growing, that's booming.
It does feel like there's some kind of strategic shift happening there.
I remember Delivery, as like when they first got started, they were primarily like a parcel delivery service.
Yeah.
But they've been expanding,
Yeah.
into other areas. And like PTL freight,
Right.
it often has higher profit margins.
Yeah.
So that could be a big factor in that overall revenue growth,
Makes sense.
especially if they're seeing a little bit of a slowdown
Okay.
in express parcel volume.
Well, you're right about that. Their express parcel volumes only grew by 2.5% year over year. So it does seem like maybe they're moving away from
Right.
high volume, low margin to...
Yeah, you got to go where the money is.
Yeah. Well, that leads to the question, is that actually resulting in better profitability?
That is the question.
Yeah.
Right? Like, are they actually making more money?
Yeah. Are they making more money doing that? And
Yeah.
it seems like the answer is yes.
Yeah.
Delivery had an EBITDA of 57 CR
Oh, yeah.
with a 2.6% margin in Q2 FY25.
Not bad.
And just a year ago, in the same quarter,
Yeah.
they actually had a loss of 16 CR.
Oof.
Yeah. So, and they've gone from a 103 CR loss
Wow.
to a Euro DR profit.
Yeah, that's a big swing.
It's a huge swing.
In just a year.
Yeah.
Hard to ignore.
So it does seem like their business model is
Right.
maturing a little bit.
Yeah, absolutely.
But, we keep talking about these different service lines.
Yeah.
We've mentioned express parcel and PTL freight.
Right.
But they also have supply chain services, and that
Right.
revenue is just exploding.
How much?
43%
Wow.
year-over-year increase.
Okay, so
Big growth there.
huge growth there.
Yeah.
The question is, are they maintaining profitability with that kind of growth?
Well, that's where it gets a little more complicated.
Okay.
So the revenue growth in supply chain services is, like you said, undeniable,
Yeah.
really impressive. But the segment actually slipped into the negative zone this quarter with a -4.4% margin.
Wait, you're losing money on their fastest growing service line?
Well, so there are a few possibilities.
Yeah.
One possibility is they're just pouring tons of resources
Yeah.
into rapid expansion.
Right.
So they're sacrificing short-term profitability
Right.
to grab a larger chunk of the market share.
So like the classic land grab?
Yeah, it's like a classic land grab.
Right. So
Right.
get in there.
Dominate the market.
Yeah.
Later, we'll figure out how to make money.
Yeah. It's a risky move,
Yeah,
but
it is risky.
it could be lucrative. It could be very lucrative.
Right. But they're going to need some deep pockets to fund that.
Right. You need money to lose money.
Yeah, exactly. And that's where you have to look at their financials.
Okay.
And their financial report shows that they do have a pretty healthy cash reserve.
Okay. How much we're talking?
5,488 CR.
Right.
So, that's a pretty good cushion to have
Yeah.
while they're going through this aggressive expansion.
But are they being smart with their cash flow?
Yes, the cash flow statement.
Yeah.
So it's one thing to have cash, but it's another to manage it well.
Yeah. You got to manage it.
What does that cash flow statement tell us?
Well, it gives us some good insights
Okay.
into how they're doing things.
All right.
And one of the key metrics is their net working capital days.
Okay.
And basically what that tells us is how long does it take them
Okay.
to convert their investments, like your inventory,
Okay.
into cash.
Got it.
And generally, a shorter time frame is better.
So you want that to be quick?
Yeah, and Delivery's been getting better at this.
Oh, okay.
Back in March 2021, it took them 87 days to do this. As of September 2024, they got it down to 38 days.
That's a huge improvement.
It's a big improvement, yeah.
So they're getting paid quicker.
Right, they're getting paid faster.
Right. They're managing their bills better.
Yeah, managing their bills better.
Which frees up more cash to invest.
Right, more cash to invest.
Yeah. But growth isn't just about clever financial management.
Yeah.
What are they actually investing in?
Right, well, this is where the story gets really interesting.
Okay.
Because they're putting a lot of their resources into capacity building. And you can see this, in the growth of their infrastructure footprint.
Okay.
Their network of gateways and their investment in automated sort centers.
Interesting.
So they're thinking long term.
Yeah.
They're focused on efficiency and scale.
So they're not just trying to squeeze
Right.
every rupee out of the present.
They're thinking about the future.
They're building for the future. That's a pretty big sign of confidence in their business model.
Right.
But before we get too much further into the details, I want to pause here
Okay.
and just ask you, the listener, what has stood out to you so far?
Yeah. What are you thinking?
What is it that has made you curious
Right.
about Delivery's performance this quarter?
What's piqued your interest?
Yeah.
Good question.
Just take a moment to reflect on that.
Yeah.
And we're going to come back and we're going to dive headfirst into
Let's do it.
all the details of their financials.
Okay.
And really explore what their investments tell us about the future of logistics in India.
Sounds good. I'm ready.
Yeah, me too.
Let's go.
Okay, so we've kind of set the stage right. We know that Delivery is growing. They're expanding.
But rapidly.
But they're also dealing with these rising costs.
Right.
And, we talked about that loss-making segment in their supply chain services. Let's get a little more granular here. Let's look at some of these cost drivers.
All right. So one of the things that I found fascinating here is if you look at the breakdown of their expenses in Q2 FY25, like a huge chunk of their revenue from services. About 74.8% was eaten up by freight handling and servicing costs.
So that's just keeping things moving.
Yeah, it's just keeping the wheels turning.
Yeah. Is that higher than usual or?
Well, it has kicked up a bit compared to, previous quarters. And when you look closely, like line haul expenses, vehicle rentals, even contractual manpower costs. Those have all increased.
As a percentage of their revenue.
As a percentage of their revenue, yeah.
So even though their profitability is up,
right,
their costs are up too.
Yeah.
That seems like a tricky
It is tricky.
situation to manage.
Yeah, it's all about balance, right?
Yeah.
Trying to balance that growth with profitability.
In a sector like logistics.
In a sector like logistics, which is inherently expensive, there's no way around it. You got to move stuff around.
You got to move stuff around.
It costs money.
And that's why I guess that shift to those higher margin services is so important.
It's critical.
Yeah.
And it makes you wonder how those margins are playing out, across those different lines of service.
Yeah. Do we have any visibility into that?
Well, luckily, they break it down.
Okay.
They give us the detail.
Okay, great.
About service line.
Lay it on me.
Okay, so as we suspected, Express Parcel, which is still profitable, that margin decreased to 15.1% in Q2 FY25.
All right.
Down from 16.8% in the same quarter last year.
So that squeeze is real.
Yeah, the squeeze is happening.
In that core business.
The PTL freight.
Ah, yeah.
The one they're pitting their hopes on.
Well, PTL freight is a bright spot.
Okay.
I mean, that margin jumped from 2.2% to 3.2%.
Okay.
Which is respectable.
Okay, so that validates that strategy.
It does.
Okay, what about the supply chain services?
Yes.
That high-growth, loss-making segment.
The mystery.
The mystery.
Right. Yeah. So despite that huge revenue growth, 43%, remember, their supply chain services actually dipped into the negative zone.
Oh.
Man at 4.4% margin in Q2 FY25.
So a loss-making growth engine.
Yeah, what was going on there?
What do you make of that? Is this trouble or is this just growing pains?
Well, I think there are a couple of ways to look at this.
Okay.
One possibility is they're just going all in on growth.
Yeah.
They're saying we're going to accept losses in the short term to grab a bigger piece of that market.
So like building the engine?
Yeah, it's like building this massive, powerful engine.
But it's guzzling fuel right now.
But it's guzzling fuel while they're getting it up to speed.
Yeah.
Right?
Yeah.
Another possibility is maybe they're just having some hiccups
as
they scale up this relatively new service line,
Yeah.
right? Maybe there are inefficiencies.
Maybe they haven't quite figured out the most profitable way
Right.
to operate in this space yet.
No, it's not all sunshine and rainbows
No, it's not.
for
It's
delivery.
a mixed bag.
Yeah. It adds a little wrinkle to their story.
It does.
It makes you wonder what somebody
Right.
looking at this company as an investment
Right. What should they be thinking?
should be thinking.
What should they make of all this?
Yeah.
Well, it's a classic risk-reward scenario,
Oh, okay.
right? On one hand, you've got a company with a commanding market position,
Yeah.
strong revenue growth.
Yeah.
They're improving their profitability overall,
Yeah.
and they're investing in these really cool futuristic technologies,
Right.
like robotics and automation,
Yeah.
which could give them a huge advantage.
Huge advantage.
Right.
Yeah.
But on the other hand,
Yeah. Those rising costs.
yeah, you got the rising costs.
And that supply chain services question mark.
Yeah, that uncertainty
Yeah.
hanging over that fastest growing segment.
Yeah. So it's bet
It is a bet.
on those investments paying off.
Yeah, are they going to pay off?
And can they manage those growing pains?
Right, sure. A lot to think about
A lot to think about.
for investors.
Before we move on, I do want to touch on the cash flow statement again.
Okay, the cash flow statement.
Yeah.
You know, I think it's important. Financial EKG,
Yeah.
Giving us a reading on the health of the company.
Yeah. And one thing I thought was interesting
Yeah.
was the amount of money they're putting
Yeah.
into capacity building.
Huge investments.
Huge investments. And one way to see that
Yeah.
is to look at their capital expenditure as a percentage of revenue from services.
Okay, so how much are they spending?
Yeah, how much are they spending? And it's been hovering around,
Uh-huh.
1.5% to 2.8% for the last few years.
Okay.
But in the first half of FY25,
Yeah,
it jumped up to 3.5%.
that's a big jump.
That's a big jump. So what's driving that? Are they just spending money to spend money?
Well, if you break it down,
Okay.
most of that increase is going to investments in vehicles automation,
Okay.
plant and machinery, and leasehold improvements.
So this is all
This is all about building that infrastructure.
aligning with that vision of the future.
Absolutely. It aligns perfectly with their stated vision
Mhm.
of using technology to drive efficiency and scale.
They're putting their money where their mouth is.
They are.
Okay, so capital expenditure is only one piece
Right.
of the cash flow puzzle.
It's one piece of the puzzle.
What about their working capital position?
Working capital.
Yeah. How are they managing?
The lifeblood of any business.
Yeah. How are they managing those short-term
Right.
assets and liabilities?
And all about how well they're managing their day-to-day
Yeah.
finances.
Yeah.
And one of the key metrics to look at there
Okay.
is their net working capital days.
Oh.
Think of it as like,
Mm-hmm.
how long does it take them
Okay.
to turn their investments,
Yeah.
inventory,
Yeah.
into cash?
Got it.
The shorter that time frame, the better their cash flow.
So basically, they want to get paid quickly
Yeah, get paid quick.
and pay their bills slowly,
Pay your bills slow.
like any smart business owner.
Exactly like every business wants to do.
Are they doing it?
Well, they've actually been getting better at it
Okay.
over the past few years.
Okay.
So back in March 2021,
Yeah.
it took them 87 days.
Okay.
Now, as of September 2024,
Uh-huh.
they got it down to 38 days.
That's a big improvement.
This huge improvement, yeah.
So how did they do that?
But probably a combination of things, right?
Mm.
They've streamlined their operations,
Okay.
implemented better inventory management systems,
Uh-huh.
maybe negotiated better terms with their suppliers and customers.
So it's not just about
It's not just about revenue growth.
revenue growth.
It's about optimizing every aspect of your business
Yeah.
to maximize that cash flow
Yeah. And fuel that expansion.
and fuel the expansion.
This is starting to paint a picture
It is.
of how delivery is.
Of how they're approaching things.
Approaching things
Strategically?
strategically, yeah.
Right.
But we've only scratched the surface.
Oh, yeah.
There's so much more.
There are layers upon layers of insight
Yeah.
hidden within these financial reports.
Let's talk about the balance sheet.
Okay, the balance sheet,
Often overlooked,
yeah,
but it gives us a snapshot
it's a snapshot
of their financial health.
at a specific point in time.
Yeah, so what are the highlights there?
Well, one of the things that jumps out at me
Yeah,
is their investment in property, plant, and equipment.
that's the backbone
It's the backbone of their operations.
of their business.
Right.
Yeah,
Without those physical assets,
they can't move anything.
they can't move anything, right?
Yeah.
So as of September 30, 2024,
Mm-hmm.
their PP&E stood at a considerable $11,114.03 million,
Okay.
which is up significantly
Okay.
from $9,320.84 million at the end of the previous fiscal year.
So they're expanding.
Yeah. They're investing in their physical footprint
Yeah.
and their capacity to handle that growth.
Makes sense.
Right.
Yeah.
But what about the other side of the equation?
The liabilities.
The liabilities, yeah. What do they owe?
What do they owe?
What obligations do they have?
Yeah.
Well, one of their biggest liabilities is lease obligations.
Okay.
Remember, they rely heavily on leased properties
Right.
for their operations.
Makes sense.
As of September 2024,
Yeah.
their lease liabilities totaled $10,588.61 million.
That's a big number, but I mean, leasing is pretty common.
It is.
That's logistics.
It's standard practice.
Yeah, it's a smart way to grow.
It is,
And
without
you
having
spend
to,
all your cash.
yeah, own all that real estate.
Exactly. You want to be agile.
Yeah.
You want to expand quickly.
Yeah.
You don't want to be saddled with these huge upfront investments.
It's all about leveraging
right.
resources strategically.
It's all about strategy.
Yeah. And remember,
Yeah.
liabilities are a natural part of doing business,
Yeah.
especially for a company that's growing as fast as Delhivery.
Right.
The key is to manage them,
You mentioned earlier
manage those liabilities.
that they're putting money into these new technologies.
Oh, yeah.
Robotics, automation.
Yeah. The future.
Yeah. Is there anything in these reports that tells us about those initiatives?
Yeah, actually there is.
Okay.
If you look at their investor presentation,
Mm-hmm.
there's a section about their employee stock options,
Interesting. Okay.
and specifically the ones that are tied to performance-based goals.
Okay. How does that relate to the tech investments?
Well, some of those performance-based stock options
Okay.
are linked to the successful development and implementation of these new technologies.
Oh, so they're incentivizing
They're incentivizing their
employees to get involved.
to be a part of that innovation.
So they're aligning the interests
Absolutely.
of the employees
They're aligned
with this goal of becoming
Yeah.
a tech-driven logistics leader.
It's a smart move.
That's pretty clever.
Yeah. Shows they're serious about it.
Yeah.
Yeah.
It's a reminder that even with all this automation,
Right.
people are still a huge part
People are still important.
of the business.
Absolutely.
Let's zoom out for a second.
Okay.
What is the big picture takeaway?
Okay, so big picture,
Yeah.
Delhivery is doing well
Yeah.
on a lot of fronts.
They're growing.
They're growing rapidly.
They're profitable.
Profitability is improving.
Yeah. Investing in technology,
Investing in the future.
managing their cash flow,
Managing their cash flow well.
strong liquidity position.
Strong liquidity position.
But it's
Okay.
not all perfect.
There are challenges.
They got those rising costs.
The rising costs.
Zero question mark.
That question mark over the supply chain services.
So
It's a high growth, high risk scenario.
it'll be interesting to see
It will be very
how it
interesting
plays out.
to see how this all unfolds.
Yeah.
But before we move on,
Yeah.
I want to highlight one more interesting little detail
Okay.
from their investor presentation.
Lay it on me.
This sheds light on like a really unique dynamic
Okay.
of the Indian e-commerce landscape.
Okay. I'm intrigued.
It's about RTO,
RTO.
return to origin shipments.
Okay. So basically these are
These are orders that are returned by customers.
returned by customers
Right.
for whatever reason.
Could be sizing issues, quality concerns.
Okay, mind.
Change your mind. You just don't want it anymore.
Yeah. The dreaded returns.
The dreaded returns.
Every retailer's nightmare.
The bane of e-commerce.
Yeah. Oh,
right.
Yeah.
So what's interesting is that Delhivery,
Yeah.
they give us two sets of figures
Okay.
for their express parcel volumes.
Okay.
They give us the reported volume
Uh-huh.
and then the volume if you count RTO shipments separately.
Wow. So they're showing us the cost of returns.
They're giving us a peek behind the curtain
Yeah.
at the hidden cost of
Yeah.
returns
In the Indian e-commerce market.
in the Indian e-commerce market.
What are those numbers telling us?
Okay, so in Q2FY25, their reported express parcel volume,
Uh-huh.
185 million shipments.
Okay.
But when you include those RTO shipments,
Yeah.
that number jumps to 216 million.
That's a lot of returns.
That's a lot of packages going back.
It really highlights how complicated
It does.
it is to manage logistics
Yeah?
in a market like India
Yeah.
with those high RTO rates.
With high RTO rates.
Why do you think they're being so transparent about this?
Well, I think it shows their commitment to transparency.
Yeah.
Right? They're acknowledging the reality
Yeah.
of the Indian market,
Uh-huh.
and they're giving investors a complete picture
Yeah.
of their operations.
It also makes me think that they're probably working on ways.
Yeah, they're probably actively developing strategies
Yeah.
to minimize the impact
Yeah.
of RTO on their business.
So it's not just about delivering packages.
You know, it's about the whole life cycle
It's about that whole life cycle.
of an order,
Yeah.
including those returns.
Okay. before we move on, what is your biggest takeaway
Yeah, what are you thinking?
from this deep dive
What has resonated with you?
into Delivery's financials?
Yeah. What are your key takeaways
Yeah.
from this exploration of Delivery's performance?
Ah,
Hold on to those thoughts
yeah.
because we're about to shift gears
Okay.
and we're going to talk about what Delivery's journey tells us,
Yeah.
particularly their investments in technology and expansion,
Okay.
about the broader trends that are shaping the future
Yeah.
of logistics in India.
Time to put on our futurist hats.
Futurist hats on.
And look ahead.
Let's look ahead.
What does Delivery's story tell us
Yeah.
about this evolving landscape
About the future
of logistics in India?
of logistics.
All right, so we've looked at all these numbers.
Yeah.
We've explored Delivery's strategic moves.
Mm-hmm.
We've even tried to, peek into that crystal ball
Yeah.
to see what the future of logistics in India might look like.
Right.
But before we wrap this up, I want to bring it back to something really crucial.
What's that?
What does all this mean for you,
Yeah.
the listener?
Right. For the person listening right now, what do they do with this?
Yeah, we can get lost in these spreadsheets.
We can drown in data.
Yeah.
It's easy to do.
Yeah, but the real value is...
The value's in the insights.
Yeah.
What are the takeaways?
Takeaways.
What can you actually do with this information?
So should I be buying delivery stock?
Yeah,
Are there
yeah.
red flags?
I can't give you financial advice.
Of course.
Right. You got to talk to a financial expert for that.
Yeah.
But what I can do is maybe highlight some points
Okay.
for you to consider
Yeah.
as you're evaluating delivery
Okay.
or really any company in this logistics space.
Okay, hit me.
Okay. So first of all,
Yeah.
don't just be impressed by size.
Okay.
Delivery's a leader.
Yeah.
Yes.
Yeah.
But you got to understand the competitive landscape.
Okay.
Are there smaller companies,
Yeah.
maybe more agile players that are coming in with new technologies,
Right.
disruptive business models
Yeah.
that could challenge delivery?
So don't just look at the big guy.
Don't just look at the big guy.
Yeah.
Sometimes the little guy can shake things up.
Second, dig into those financials.
Yeah. Get your hands dirty.
Look at those margins.
Yeah, we saw how those margins can vary.
Yeah, across the different service lines.
Across those different service lines. So
Yeah, where's the profit coming from?
yeah. Where's the real profit?
Because it's sustainable.
Is it sustainable?
Yeah.
And how vulnerable are they
Yeah.
to things outside their control?
Fuel prices.
Fuel prices,
Yeah. Yeah.
government regulations,
All those things.
all those external factors.
That could really impact a business.
Absolutely.
Third.
Third, think
Yeah.
long term.
Okay.
Delivery is making these big bets
Yeah.
on automation, right?
Uh-huh.
Ask yourself, will it pay off?
Yeah.
How will it affect their workforce?
That's a big question.
How will it affect their relationships with those delivery partners?
This deep dive has shown us
Yeah.
delivery is at a really interesting point.
Yeah, they're at a turning point.
In their journey,
Yeah.
they're not just delivering parcels anymore.
They want to be a powerhouse.
They're trying to be a powerhouse.
Yeah.
Integrating all this technology and data.
They've got this massive network.
Yeah, and whether they succeed or not, that's a story.
That's a story that's still being written.
That's still being written. Yeah, and,
Right. And
Correct.
your understanding of that journey,
yeah.
their financials,
Yeah.
their challenges,
Their aspirations.
their aspirations, that's what makes you an informed observer.
Yeah.
And maybe even
Maybe a savvy investor.
a savvy investor, right? So before we go,
Yeah.
we want to leave you with one final thought.
Okay.
Something we didn't really talk about directly,
Okay.
but it's been kind of swirling around this whole conversation.
I'm listening.
And it's about you, the consumer, the person listening.
Think about how your online shopping habits,
Right.
your expectations for speed,
Yeah.
your expectations for convenience,
I want it now.
yeah,
Right.
you're shaping
You are shaping
the landscape.
the landscape that delivery is navigating.
You're co-authoring their story.
You're part of the story.
Yeah, it's a reminder that business isn't just about,
It's not just about the numbers,
yeah,
the strategies.
strategies.
It's about people.
It's about people
It's about their needs
and choices.
and the connections that we create
Yeah, the connections
as we shop,
as we shop.
ship, and build the future.
You're building the future together,
One delivery at a time.
one package at a time.
And that's where our deep dive ends.
That's it.
But hopefully, you're leaving here
Yeah,
not just informed,
not just informed,
but inspired
but inspired.
to explore the world.
Go explore with a little more curiosity
Yeah.
and a lot more insight.
A lot more insight.
Until next time, keep learning, keep questioning, and keep diving deep.
See you next time.